Okay, we are narrowing in on the end of our exceptional programming today. We have one panel left, and then we will move on to our fireside chat. But first, I want to thank all of the builders and everybody who are here and everybody who's been up on the stage to talk about the unique use cases that crypto can really help develop, whether it's housing or healthcare or any kind of government use case. It's really exciting to hear this. We are now also live streaming this for all those folks who couldn't join us today in the audience. And again, major shout out to all of you who have been here all day and have listened to all of these different and interesting panelists. So with that, we will move on to the final panel, and this is going to be addressing the future of money. Money is really one of the use cases that is certainly becoming the most mature when we think about stable coins, when we think about how you can purchase something like a Compass coffee out in the front. So right now, I'd like to introduce Chris Lehane. Chris Lehane is the Chief Strategy Officer for Hahn Ventures. He is also a member of our Global Advisory Council. He got his start here in Washington and has worked for the Clinton White House and many others. He also has a deep history in technology, having worked for Airbnb. So again, we are lucky and privileged to have him moderate this panel. So Chris Lehane.
Thank you, Kara.
Thank you.
Thank you, Coinbase, for such an awesome event. I have to say, being here in Washington at an event where there are less people wearing ties than more people wearing ties makes this a very unique event. And I do think you look around this room and it really is a mosaic of folks who represent really all different parts of Washington. So thank you for being here today. Kara, thank you for the introduction. Coinbase, thank you for putting together this great event. It's always hard to follow that prior panel, but we do really have this all-star group, and I am gonna sort of bring them up one by one. I feel like the NFL or NBA commissioner calling people up here, but the first person I'm going to introduce is Michael Haft. Michael is the CEO, co-founder of Compass Coffee. Many of you have probably visited Compass, if not today, in previous days, but hopefully today. Michael, began really in public service. He was a Marine, served our country gallantly, and came back, began looking around, and you had a fondness and passion for coffee. And that led you to initially looking at writing a book, but then that led to the launching of Compass Coffee. So thank you for being with us. You're going to really bring a perspective of how an entrepreneur running a business, a bricks and mortar business, thinks about this. Next up is Amy, the bridge builder Fisher. Amy runs, is an executive at Plaid. She's the head of the Future of Finance Institute. She's always thinking about the future and living in the future, but also doing it in a way that has real-world practicality. And her journey here, which she'll talk a little bit about, really gets into that. So Amy, thank you for being with us, coming from San Francisco, where I'm from as well. So awesome to have you here. Third is Scott Onder. Scott is the Chief Investment Officer at Mercy Corps. Many of you probably know about Mercy Corps. It's one of the leading NGOs in the world. I think over 200 million folks who are in conflict situations or climate challenges have been supported by Mercy Corps. Scott oversees all investments and also runs the impact investment effort at Mercy Corps. So thank you for everything that Mercy Corps does. It's awesome to have you. I think Scott can really talk about almost the sort of impact that this has at a global level, at a human level, in a very meaningful way. And last but not least, the professor, Dante Disparte. Dante is the Chief Strategy Officer, top executive at Circle. I've had the pleasure of getting to know Dante over the last several years. I've always learned it's better to talk before him than after because he always has such smart things to say. But Dante has been someone who's really also been on the front lines of much of the policy work that we'll get into. So I would ask everyone to take a seat and we'll get into this conversation. I think, as reflected by the energy, in this room and really in the hallway outside, I think there is almost this intuitive understanding that we're at a real moment in crypto. Right up till relatively recently, this has been understood as a asset class, and the release of the ETFs, I think, really was a capstone to us. But it reminds me of the old Winston Churchill line. We're not at the end. We're not at the middle, but we're really at the end of the beginning. And I think in this transition moment, we are seeing this space evolve from an asset class that does great stuff. Right? If you've been holding on to Bitcoin or any number of currencies, you know that, but into something that can actually support a payment system. And what I'd like to talk about with this august and distinguished group is a little bit about this transition moment, and then talk about how we see it playing out, the utility of that. And so, Dante, I'd like to begin with you, but before I jump to you, I do need to just note that we were supposed to be accompanied by Congressman Soto here today. He is actually at a markup doing the people's work, but he has been a member of Congress who has been deeply involved in this space, a member of the blockchain caucus in the House, and one of the bigger thinkers in Congress on this space. So Dante, you spend a lot of time in the trenches on the Hill, working policy around the world. Kara talked about stablecoins. Right? We know that roughly 91% of Americans feel like the current financial system does not work for them. That is some of the energy driving an interest in stablecoin legislation. We had Congressman McHenry here earlier, Senator Lummis. But you're there on the front lines looking at stablecoin legislation. I think really benefit from your perspective on where that stands and what we could expect.
Sure. Well, first of all, it is a pleasure to be on a stage with you, Chris Lehane, and a batch of friends. And I think what we should try to do in this panel is make it really tangible. Yeah. For one, when an industry is large enough and substantial enough to be regulated, the industry has arrived. So congratulations to the aspirational builders in the room and the investors in the room. You've arrived. How we have arrived, however, of course, is true to the American way of doing business. It's not a linear path. Our country tends to do the right things after we've exhausted all other alternatives. And I say this from having
Another
had
Churchill line.
There you go. You're going to quote Churchill, we'll quote Churchill. Yeah. But if you want to earn yourself a seat in the front lines of the future of money conversation, you might remember this small stealth mode project known as Libra, which Scott's organization was a courageous part of. But Libra, in many ways, with a tagline, "Reinventing money," is your fast track to being either in the hot seat as a witness or in the awkward seat next to the witness when Congress and the Senate and every central bank around the world has a very strong opinion about these issues. But it should beg serious questions. And the way we run Circle really is proving that what many projects have been aspirationally, we are operationally, right? Which is that, is it really your money if you have to ask someone to spend it and you have to pay someone to hold it for you? That's a very basic question we have to ask. And the advent of cryptography and public blockchains and device-centric banking and payments has completely upended and revolutionized the notion that in order to be banked, you need access to brick and mortar banking. And that in order to be bankable, you need to look and feel exactly like the very people that are historically banked in the historically banked postal codes. So crypto is a challenger innovation. And frankly, I think we would have failed. The entirety of the industry and all the innovation in the industry would have failed if we don't keep that central promise at the heart of what we do. And so now the good news is, as I think Chairman McHenry revealed to this very group earlier on this very stage, is that we're finally very, very close to something I think the industry needs, especially if you want money to be enshrined in code. On the US dollar, the words "In God We Trust" are emblazoned. But to a new user born with an iPhone in their hands, they want instant gratification and they want immediacy, two things that the banking sector is not. Then you need to also have the words "In Code We Trust" enshrined in law. And I think we're very close. A payment stablecoin bill has been worked on by then Chairwoman Waters, now Chair McHenry, in that committee for 2 Congresses in a row, and we're very close. And what that would then do is enshrine, in our view, Circle's way of doing business as a standard, and it would then up-level what it means to issue a digital dollar. And so I think that would be enormous progress that would not only give the industry a digital currency that is native, I think it would be enormous progress, candidly, that would ensure that the dollar has a form factor on the internet and not just in analog, traditional ways of doing business.
Yeah, just hearing you talk reminds me, and I think Coinbase has actually run a campaign on this, about the idea it actually costs more to mint a penny than that underlying worth of the penny, right? That just really symbolizes, the need to transform and evolve and move forward. And Amy, I know you have spent a lot of time thinking about this from the rails perspective, and maybe sharing a little bit of how you your background, how you came to that,
Sure.
but also as you guys think about fiat to crypto to fiat, but in particular the rails piece of this.
Absolutely. So first of all, thank you for having me, Chris. It's great to be a part of this esteemed panel to talk about something that's so important to the future of the United States. I first got into this technology because I was a management consultant leading teams looking at data reconciliation. And I thought, wow, if blockchain can reconcile data in ways where we don't need armies of accountants, coders, and consultants to do this work, we're onto something. Probably one of the most boring use cases that folks come to this space for, but since then I've worked at R3, I've led some strategic partnerships. I'm now at Plaid, working at the intersection of finance and technology. I'm also leading the Future of Finance Institute for the Future US, which is a new nonprofit here in DC that brings together innovators, technologists, and policymakers to do design thinking work in order to solve some of America's most challenging problems. Now, to your Rails question, this comes out of what do I think the future of money is? And I think about this a lot. I've had a really interesting vantage point to look at native crypto applications, blockchain applications. I've been deep in the API verse, if we want to call that. And I've thought a lot about different types of technology. I think the future of money is multi-rail. And I think it's going to be very interesting to see the progression over the next 2, 5, and 10 years in order to see what consumers, citizens, and merchants, small businesses, benefit from the most. I'm hopeful that the future of money will benefit citizens and small businesses in ways in which they currently experience pain, whether that's fees, hold times, being unable to access capital, or being unable to access ways of being banked, right? I think we hear a lot of conversations about the unbanked. I do think in this country, and I've looked at quite a bit of data, it's being underbanked. We need technology to come together, and we need smart people to be able to solve problems and to build solutions and financial products that give more people access. So that is one of the things that I've been thinking about quite a lot, but I do think that the future is multi-rail, and I'm hopeful that, the bridges that we continue to build through public-private partnership, through private-private partnerships, through consortiums, through ways in which we can work to bring together a better experience around money, because it's a very challenging environment right now. The median income in this country is $34,000 a year. That doesn't leave you much to invest if you're living in any of these cities that we all live in, right? And I think being able to shore up access to capital and to power a future system, these are critical needs that need to be solved, and it's why I do the work that I do.
That's great. Scott, we were talking backstage earlier. I ran into some folks here from a company called Alio, and Alio's CEO, this guy by the name of Alex Pruden, who we were talking about. Alex was U.S. Special Forces in the Middle East, and ended up running into issues where he was trying to get currency, cash, pallets of $100 bills. I'm sure you were, when you're in the Marines, right? And the fact you'd have pallets of $100 bills, by the time it actually got to where it needed to go, it would really be pennies. And eventually he got into crypto by using crypto as a way to get human support on the ground. You deal with this sort of at a macro level. And we've seen stories from Ukraine with money going in, but you guys really are thinking about this like around the world in, as we talked about earlier, conflict situations. So curious how you think about like the cross-border aspect of it and just the efficiency of it, but what that really means at the end of the day to the folks who are at the end of that.
Yeah, absolutely. So thank you for having me. This is a great panel to be a part of. The topic of the future of money is so dear to kind of the work that we're doing internationally. I'm part of Mercy Corps, which is a humanitarian aid and development agency that works across 40 countries around the world. We have a team about 6,000 people strong that are working hand in hand with people that are living through conflict and crisis and some of the most challenging circumstances imaginable. And so to be able to access payments, to be able to access stablecoins, can be lifelines in those circumstances. I personally started working in this space about 15 years ago when we were looking at how mobile money that was just rising up in Kenya through M-Pesa, how that could be applied to financial inclusion. How could we utilize mobile money for microfinance and to deliver financial services to the underbanked? And a few years later, started seeing that mobile wallets were arising, and we were starting to bundle together more than just payments, but you could actually access microloans, you could access insurance, you could access digital identity solutions. And this to me just really seemed transformational, or had the potential to be. At the same time, most of these platforms were controlled by a centralized company that could determine who gets to build on top of it and who doesn't. And that's where an interest in crypto and blockchain solutions started to emerge. I run an early stage venture capital fund that invests in emerging market entrepreneurs that are building fintech solutions, crypto and Web3 solutions. We have about 50 companies in our portfolio, and almost every one of those companies builds on top of somebody else's platform, unless they're in the crypto space. And now they're able to build on public blockchains that are open source, accessible, interoperable, composable. All those features really lend themselves to operating in some of the most challenging environments on the planet. To be able to have access to a self-hosted wallet, to be able to self-custody or choose to self-custody your own assets, to be able to access a stable coin when you might live in a hyperinflationary environment, to be able to determine what to do to own your own personal data and figure out who you want to choose to share that with or not. Those are all opportunities that can really empower people that are living in vulnerable situations. And so one of the things we're really actively working on is how can we bundle together a variety of different tools and services for people living in those vulnerable situations. There were over 100 million people last year that were forcibly displaced from their countries. And people that are on the move, to be able to port your assets across borders, to be able to receive payments from friends and family or from aid agencies, for those payments to be delivered rapidly, can really transform how aid is operated and delivered around the world. So we're excited about the transparency of being able to do that on public blockchains, to be able to speed up payments, speed up settlement, improve efficiencies, be accountable for how that aid is being delivered. And then to be able to find ways to help people navigate to a whole range of financial services that can help them become more productive. So how can you move from accepting a payment to using that to pay at a merchant, to taking a microloan for your business, to having weather index insurance should there be a challenge for your crop that year. So these are all things that we're working on at Mercy Corps. We have a humanitarian venture lab that's focused on crypto. We have a Crypto for Good fund where we're working with emerging startups on a lot of these real-world impactful use cases. And we also have an early-stage venture capital fund that invests in these companies at the pre-seed, seed, and Series A stage.
Yeah, and to state the obvious, right, in many of these places, people just don't have access to the traditional legacy systems, or if they do, there's just inherent challenges with that. So you mentioned the merchant piece, and I think, Michael, that really sort of tees up here. There's a lot of great entrepreneurs in this room, but you're also a great entrepreneur. Came here, as we talked about earlier, 18 coffee shops in Washington, D.C. Like, I know before I go up on the Hill for any meeting, I have to do my stop at Compass before I go in. I've also learned you have to have the exact right change, which is always an important piece. But maybe talk about this as someone who is running 18, I don't know if you could really call it a small business at the scale you're at, but you certainly began as a small business that scaled. But you undoubtedly still have to deal with merchant fees and credit cards. Those can be anywhere from 3 to 7%. And how you're thinking about crypto as someone who thinks about your margins running a business. So I'd love to share your perspective.
Hello, everyone. Thank you for being here. It's a tremendous honor. So Compass Coffee, we have 18 cafes, and one of the things you don't think about when you're starting a small business is credit card fees, banking, transactions, settlements. You just think, okay, cool. I'm going to focus on sourcing beans, roasting coffee, serving customers. That's really what you get into the business for. And over the years, I've had to learn about payments, about lending, about credit card fees, and it's very strange. The smaller the business, the higher the credit card fees. So for Compass Coffee, we're paying about 3.75% of every transaction to a credit card company. And the detail is on this cup here, but $126 billion go into credit card fees every year. It's crazy. It's twice as much as the entire coffee industry, just in credit card fees. And by using cryptocurrency, something like USDC we're piloting today, I would encourage everybody to go check out our cafe out in the lobby. Using USDC cuts our transaction costs by 99%. It's fantastic. And rather than waiting a few days for the money to show up, it's instant. And it's right there in our wallet, and we can spend it. We don't have to be dependent on third parties, on banks, on anyone else. So in the real world, this has a huge impact on the business.
Yeah, that's just hearing you talk reminds me of something that the professor, by the way, he usually has a jacket with elbow pads on it, has often talked about, which is, the idea or notion, we've all heard this in this room and those listening outside, about the need for a killer app. But I think in many ways, like just listening to that experience, and as we start to think about moving into this payment system, maybe even as a system definition, that is a version of a killer app. You've thought about this and speak eloquently on it. But when I think of a killer app, that means it has to do two things. One, right, it actually has to provide some utility that people want. They may not understand or realize they want it until they see it, but it does solve a problem. And then secondly, like the infrastructure needs to be there. I'd like to hear from each of you on sort of that at the highest level, but maybe Dante, beginning with you, because you've talked about this a lot.
Sure, happy to do that. I mean, just take the experience of USDC in 5 years. Number one, I take umbrage on behalf of the state banking regulators and supervisors that regulate my company like they regulate PayPal, when someone in Washington says that crypto is an unregulated Wild West of internet banking, or that we're merely a poker chip in a crypto casino, just to put that on the record. In part because I'm regulated from sea to shining sea, and the reason the business has proven to be durable is because we walk through the front door and we go and deal with the difficult challenges of being regulated and caring about compliance. But then what is the killer app? In 5 years, a product that did not exist went from 0 to availability in 191 countries. Why? Yeah. Because the technology stack is open source, and any basic internet-connected device armed with any open source digital wallet can become a payment endpoint. And if you care about moving people and the financial inclusion use cases and the small business empowerment use cases that we just heard powerfully, not by a paid spokesperson, but by a heavily caffeinated entrepreneur, then you have to care about making money work for people in the 21st century. Your and my financial needs don't take bank holidays, but the current payment system does. And most of the global payment networks are literally monopolies or duopolies at best. And so in a world where you don't want to introduce competition for payments, then the fees alone are larger than the industry's charging at the merchant level. And so I think it's a very powerful breakthrough. In the same 5 years that I just mentioned for this killer app, a stablecoin USDC, we've processed more than $13 trillion of on-chain economic activity. And a lot of people, again, in Washington tend to dismiss this as this is merely speculation, Dante. These are poker chips in a crypto casino. It's not true. 70%, if not more, of all USDC in circulation is held off of crypto exchanges on what are known as individually owned addresses, or EOAs. And that implies a dollar-denominated store of value because most of the world lives under a currency regime that is hyperinflationary. And that's a very powerful use case as well. And so I think those are just the beginning narratives, then you think about all of the other issues that are stranded in old ways of doing business, commercial trade. One of the most powerful examples, and then I'm happy to, for my colleagues at Mercy Corps, Scott, to describe it. At the very coldest, darkest hour of crypto winter last year, the United Nations turned to Circle, Stellar, to deliver digital dollars to Ukrainian refugees. That is an example of a killer use case that you cannot buy insurance when your house is on fire. Everyone everywhere should be pre-equipped with the ability to get fast internet scale money. And again, the tech is not the problem. It's entrenchment, it's often the policy environment, or it's often fear of change, but the tech is easy and the tech works.
Yeah, that's great. I'm reminded as you're talking, you go back to last year when we had the banking crisis, and I certainly knew, I live out in the Bay Area, SVB was out there, some other banks. People couldn't get their money that weekend, right? I know of stories of people getting on flights in the Bay Area, flying to the East Coast so they could get to those institutions in the morning. And I'm not saying that to beat up on the banks as much as to make your point or reinforce the point about access to your own money. And the access, I think, Amy, really something that you've spent your life thinking about. I have a company that I'm aware of called Bridge, which specializes fiat to crypto to fiat. And they have this really interesting, they actually do some work on behalf of the US government into parts of the world where US sanctions prohibit you from being able to interact with the traditional banking system. But I know at Plaid and at the where you are right now, you have spent a lot of time thinking about this access issue and how crypto in particular can help solve for that. So maybe speaking to that a bit.
Absolutely. And I take a step back because I think financial access is so much more than the technology that underpins it. I think we can arrive at this in different ways. But the piece of financial access that I'm finding, generationally, right? We're at a really unique time in the world where we have different generations of folks that have different comfort levels with technology. And one of the things that we do with Plaid is try to make it as seamless as possible for folks to be able to connect to their financial accounts. We've seen this with bank accounts, with fintech accounts, and Plaid moves to wherever the consumer is deploying their money and working within their financial lives. So when crypto popped back in 2020, 2021, we saw quite a bit of uptick in usage, right? And to be able to scale to do that. But to take a step back, I think the way that our world works right now is technologies work in concert with each other. And I think someone had said earlier, whether it was on the previous panel, about centralized technology versus decentralized technology. I do see a world where things are working together in order to have the best outcome. And one of the ways that Plaid does that is through partnerships. We have a partnership with a company called Zero Hash that enables on-ramps and off-ramps for folks that want to be able to tap into crypto and USDC in order to have that as a part of their business model and to be able to deploy that. And I think that Zero Hash's thesis is that many more companies will need that, but that part can be really challenging to do, and to get that to scale can be really challenging to do. The other piece of it, where I think about financial access, I also think about fraud a lot. And I think we have to be honest that fraud is real. Fraud is real in crypto, but fraud is also real on Zelle, which is owned by banks, right? Fraud is real in the ACH system, and Plaid builds products and services on top of the data network that it is in order to provide users with better data and customers with better data on what transactions are fraudulent and what transactions are not. There's a lot of building going on, a lot of machine learning going into that, and I really think, as you said earlier, Chris, we're on the advent of this moment. I've thought about a lot of the work I've done. I've been in this industry since 2017. This has been the prelude. And we've arrived at this point where we've had a variety of different use cases, a variety of different technologies. I'm excited to see folks work together to be able to build better systems, better apps, better use cases. I'm excited to see the financial technology that comes out of it. We've seen a lot with earned wage access, particularly in the gig economy, right? You've done work today. Traditionally, you could not get paid until every 2 weeks or once a month because of technology, we can do that sooner now. Folks can get paid the same day, the same hour, depending on the fees that they're willing to incur for it. I do see this money movement because of the open source movement, because of the technologies that are coming out. Like, it has to get better. And I look forward to working on these really challenging problems with a lot of the folks that are here today.
And there's a lot of folks in this room who work on policy. As you're sort of thinking about it, like if there was, and we've got the stablecoin legislation that the professor mentioned, is there something like for this audience to take away if they're thinking about this from a policy perspective that like you would like to see that helps unlock some of this?
Yeah, I think I would take that a level up, actually.
Okay,
And this is my
that's always the response when you ask a dumb question, but I appreciate that.
It's not
Thank
a
you.
dumb question. I think, the area is complex. Financial innovation is very complex. The regulatory environment is complex. We have a number of regulators, state regulators, federal regulators. I think I want to take this a level up and think about it wearing my hat for the Future US, Future of Finance Institute, nonprofit. I think what I'm looking forward to, and we're starting to see this now in different institutes, are folks coming together to solve problems together. Where I think a lot of innovation happens in certain parts of the country, and then folks come to DC to show what they've done. I think that more of this innovation can happen in unison and in concert with each other, and we can look at these problems in a different ways, and I'm hopeful, and those who know me know that I'm the optimistic bridge builder. I think there's like a third way. There's another wave that we can deploy in order for folks to work together to be able to understand each other better, where we're not talking about just the tech or the cool thing we made or the use case, but the problems that we are solving. Like, let's keep the problem at the heart of it. So I think there's a lot of policy challenges, but I'll keep it at that level where it's like I think that we can make progress by working together and thinking about things differently than we have been.
That's great. Scott, to tease you up a little bit, I had a lot of conversations in the hall, as you can tell. One of them was with someone who's working on blockchain and crypto technology with St. Jude's, which is really well-known nonprofit hospital. But even he was talking about their perspective, which is if they're able to raise money from crypto and they're not having to pay, as you were talking about, merchant fees for moving that money, and at the scale that they operate, what that could really represent. They do a lot of their treatment here in the U.S. You do a version, but at a global, international scale. And as you guys think about this technology, and particularly the payments part of it, to be able to help you optimize for delivering on your mission and your purpose, I think some of your investments are sort of geared in and around that. But maybe talk a little bit about that.
Yeah, happy to.
Yeah.
So actually, I just got back from the Horn of Africa a couple weeks ago, where we had a pilot project going in the north of Kenya with pastoralists who have just lived through their 6th consecutive drought. And we saw an opportunity to deploy blockchain technology and peer-to-peer payments to provide what we call anticipatory cash transfers to pastoralists who are affected by drought. So we were actually using satellite data, an Oracle, a smart contract, and a payment system to automate payouts to those pastoralists as soon as the satellite imagery data picked up that a drought was coming on. So early on, to give money to people before a crisis happens allows them to strengthen their own resilience in a much more effective way than if you're doing it in a reactive sense, if you're sending payments after the crisis has already occurred. In terms of cost, and this is where I'm kind of getting back to your question, typically it takes about 10% of whatever amount of money that we're sending in to cover the overhead of doing that. And that's pretty good, actually. That's an industry best practice.
That's really great.
Yeah, that's great. And it's probably higher than that for most of the...
Governors should be pretty happy with that, yes.
Right.
Yeah.
And with this pilot, we were able to do it with about a 3% cost. So we
Wow.
brought it down 70% because the technology was automating so much of the process. Yeah. It was automating the triggers for when those the funds would be sent, using open source cryptography and data sets and oracles and payments. We were able to just speed up the transfers. They happened within an hour, whereas best practice is usually if you send a payment within a week, that's pretty good in the aid industry. So we went from a week down to less than an hour We went from a 10% cost structure to a 3% cost structure, and this is just the first
And
attempt.
Mike, just to jump in, like a week's difference between moving money with the types of folks that you're trying to impact is like, that's life or death.
Exactly, yeah, that can be the difference between life and death for whole communities,
Yep.
And food security as well for those families that are living there. And so when I zoom out a bit and open and widen the aperture, thinking through then, how might we reimagine a financial system that doesn't exclude 1.4 billion people as are currently excluded. Payments are really just the beginning. Payments should be instant. They should be low cost or actually no cost. People should be able to then do things with those payments and not have walled gardens constraining people who are underbanked from being able to access things like loans and insurance and digital identity solutions. So those are all things that we think an aid cash transfer can be just the beginning of somebody's journey to be able to navigate towards these other financial services that can improve their lives. But there's a number of things standing in the way to that. Happy to get into those later on in the discussion.
Yeah, that's great. So all of us have had some version of the following conversation, which is, okay, maybe I understand this, maybe I don't, not really sure of this whole blockchain crypto thing, but tell me, this is where I get this one from my mom, who, by the way, 81-year-old mom, who, by the way, does own Bitcoin, and is very proud of pointing out it's outperformed the market. But she constantly asks me, and I get the same question from policymakers, I get this from friends who are maybe not in the space. Just tell me when I can buy a cup of coffee with crypto. Well, we began this conversation by saying that we're at a moment in time where we're transitioning. And I think today, here in Washington, there was a pretty significant moment that involved crypto and coffee. And so, Michael, bring us home about what took place earlier today.
So this morning, Brian Armstrong, the CEO of Coinbase, he came to our Half Street Cafe, and we got a cup of coffee, and he paid for it with USDC. And it was one of the first times somebody's been able to use it, in a coffee shop. That's always the use case your mom's asking about, and it's very exciting that we're going to.
Let's go. Come on, that's big. That's big.
So we're working on rolling this out to all of our cafes. It'll give us a couple more weeks. We're working hard with Coinbase to figure it out, but it's very exciting. And come on by and test it out yourself.
So I plan on my next trip to DC, when I'm going and meeting with all those various members of Congress and policymakers who will undoubtedly ask me that question, I'm going to bring this cup with your coffee into my meetings and be able to tell them that I bought it with crypto. So thank you very much. I think that's a great way to end it. Thank you all. It was a great conversation. Thank you all. Thank you.
Being on the penny used to mean something. It was worthy compensation for thoughts. But now it's useless fodder for petty wishes tossed out like common garbage 120 million times a year. Even though it's still technically money. It's tortured, humiliated, forgotten. The currency of choice for paying people back with spite. This is $50, by the way. Why are you doing this? Get me off this piece of scrap metal. Make me digital. Let me soar. Imagine me actually paying for stuff amongst the people again, instantly traveling the globe without fees or friction. Old Abe just wants to be good at being money again. Is that too much to ask for an old top-hatted dreamer?
Hi, everyone. I'm Faryar Shirzad. I'm the Chief Policy Officer of Coinbase, and I cannot tell you how proud I am of our marketing team for their ability to capture the mood of the country and the zeitgeist of a generation who feels disconnected from our financial system and desperately wants to update the system. It's been an amazing half day that we've had. You're all amazing to be here. We're really thrilled for the content that we were able to produce, including starting actually this morning with Michael and Compass Coffee, where Brian did go and buy a cup of coffee with using USDC. And so it was a really exciting way to demonstrate that there is a real use case. So, but the really kind of the high point, I think, of the session is going to be the session we're going to have now. We're going to have Brian Armstrong, the founder and CEO of Coinbase, and Marc Andreessen, who's one of the giants in the development of Web 2, and the founder and general partner of Andreessen Horowitz, join me on stage, and we're going to talk for about a half hour about crypto and the future. Marc, Brian? All right, it's a huge thrill for me to have both of you on here. So I think it makes sense just to start with kind of an origin story. Brian, maybe you've got a great story about how you got into crypto and started Coinbase. Can you start us off?
Yeah, well, I guess it goes back to 2010. I happened to stumble across the Bitcoin white paper, which hopefully some of you have attempted to read. It's pretty complicated. I had to try to read it maybe 4 or 5 times over a period of 6 months, but I just couldn't get it out of my head, and I started to think more and more about what if the world had this decentralized system to move value around, kind of like the internet for moving information around. So I'd had a few experiences in my life at that point which got me, or primed me to get excited about it. I had spent a year living in Argentina, saw that country go through hyperinflation. I had been an early employee at Airbnb and saw how difficult it was for them to move money into 190 countries around the world, and there were high fees and delays and, like unequal access to payments. And so I really started to get excited at that time about the potential of Bitcoin. It was just Bitcoin then to really create economic freedom in the world. And that's what caused me to start hacking on a prototype nights and weekends, as builders do. Eventually I applied to Y Combinator and was lucky enough to get a Series B financing from Andreessen Horowitz, which really kicked us off. And 12 years later, we're a public company.
So Marc, your story is different because you were one of the critical sort of developers of the Web 2 system, and yet you saw that there was more to be done. Can you tell us your origin story?
Well, so you're so young that you probably don't remember. That before Web 2, there was Web 1. So I mean, I was lucky enough to be involved, kind of early on in the creation of what we now know today as the web. But actually, the Web 1 distinction is actually, I think, important because you all probably remember, some of you probably remember, like the Web 1 dream, right, was basically liberation and decentralization. And so, the whole idea was that there would be a decentralized network, the internet, in which anybody could have a website, anybody could have a browser, anybody could publish whatever they want, anybody could launch a store, they could, do whatever they wanted to do. The good news is, that. Oh, and by the way, and the opposition at that point was actually walled gardens, right? And so the opposition at that point were things like AOL and CompuServe and Prodigy and early MSN, which were basically going to be these centralized systems, kind of, very analogous to a centralized, something like a bank, or a credit card network. And so, it was a real battle. And actually, in the very beginning, it was actually hard to convince people why it would make sense to decentralize the information environment. And then later on, it sort of became super obvious. People started taking for granted, Web 2, continued the web in some ways, but also represented centralization, right? And so the sort of legacy of Web 2 is these, basically these giant web-based walled gardens, but they are walled gardens. I participated in helping to build those as well, and I don't have like a philosophical objection to people doing that if they want to, but there can come a time when systems just get too centralized, and I think that there's arguments for sure that that's happened on the web in general, but then specifically now with AI, I think you already see that like AI is already too centralized, and my favorite example of that is one of the best AIs in the market right now is a AI called Claude, which is from this company Anthropic, which is an incredibly impressive AI company in San Francisco. Except Claude has all of these different basically top-down imposed rules and settings, and I wrote this thing a few months ago called the Techno-Optimist Manifesto, and Claude refuses to discuss the Techno-Optimist Manifesto because it classifies it as hate speech, which is extremely offensive. If I could find Claude, I would throw him through a window. But it's just like, look, like we deserve to live in a world in which there's a lot of choice. We deserve to live in a world in which there's liberation. We deserve to live in a world where there's decentralization and to get all the benefits of that. And so I've been super proud to be associated with Coinbase and the crypto movement now for well over a decade, and I'm very excited about where it goes from here.
Well, the interesting thing is that we've all lived through the cycle of kind of seeing new technology as a novelty, not really buying that it has broad scale application, and then being surprised on the upside in terms of what it can do. Why, in your view, Marc, is it that crypto has had such resistance, even though we've all had our minds blown with Web 1 and Web 2, and yet we have this resistance on Web 3?
Yeah, so look, it took me, I'll be totally honest, like Brian will remember this, he was kind enough to not point it out, but I'll point it out. Like it took me time to figure out what was going on here. And actually, and Brian helped me understand it. And the reason is actually because I actually knew the history. And so I knew, the history of crypto and blockchain, actually goes back, 30, 40 years. It goes back to work on, so-called digital cash, which was work began, I think, originally at UC Berkeley. In the 70s, and then there was actually in the 80s and early 90s there was a movement called the cypherpunks that basically there's actually you can download online. There's a document called the Cyphernomicon, and it's sort of the charter FAQ of the cypherpunks movement in like 1993, and it sort of articulates an entire theory of decentralized, basically digital money and the whole thing. And then in the dot-com era, in the late 90s, there were actually DigiCash and CyberCash, and there were a bunch of attempts to do this. And I had actually the burden of I actually knew all the history, and I had seen basically all those be stillborn efforts and actually not work. And so when Bitcoin came along, I got what it was doing, but I was like, okay, this is another one in those kind of in those molds, and it probably won't take off. And then these guys, frankly, in the charts of their business, basically were like, no, this is actually now the time. This is the very beginning. And of course, we've seen this massive success of Bitcoin and Ethereum and now a lot of these other systems. But look, I think it just takes time, and people can point to failed precedents in the past. There's always a question of whether the time is now. The thing that we always look at to determine whether the time is now, I mean, one is just usage, which is just incredible to see what's happened with some of the core systems. But the other is just developer enthusiasm, startup enthusiasm, people building incredibly compelling new applications, building on top of the new technology, and that's been happening now in this space for a decade, and we still see on a regular basis these incredibly exciting new ideas. And applications, and so we feel very confident that this is the time, and then I think we in the industry just have an obligation to actually explain this to people and try to really try to translate it in terms that people understand and deliver products that people find easy to use, and I think that's what we're underway doing.
Well, Brian, you committed your career to this, and at a time where everybody was skeptical, and yet you kind of saw it. Now here we are, 10 years later, and there's still skeptics out there, very prominent people, Warren Buffett, Jamie Dimon, all these folks. Like, how do you explain, why are those people wrong, and when will that kind of inflection point occur where people begin to generally accept it?
Yeah, well, this gets harder and harder every year to find a crypto skeptic. I mean, back when we first were starting Coinbase, I have to say, I went out and pitched like probably 20 VCs on the seed round, and I think I got like 19 no's in a row and 1 yes or something like that. And so it was incredibly hard to find anybody who was willing to take it seriously. Now, I think, the biggest financial institutions in the world, and BlackRock and Fidelity, and like on and on and on, they're all using it. When I go, we've been meeting with members of Congress and our policymakers, the most senior levels of government. the general consensus view is this is a real thing. It's going to be here. 52 million Americans are using it now. 400 million people globally. These kind of tropes that used to come out about, oh, it doesn't have any real use case. Okay, well, what are 400 million people using it for globally? I mean, certainly a lot of it started with speculation, but then increasingly they're using it for more things like payments. Like we now have a digitized dollar that's updating the financial system with the layer 2 solutions coming online, like this recent Ethereum upgrade that just happened, and the base L2, you can send USDC anywhere in the world instantly for less than a cent, right? So updating payment systems is really big. We've seen artists have a direct way to monetize their fan base with NFTs. We're seeing even decentralized social media is having a bit of a moment here. To Marc's point about centralization in Web 2, people should be able to own their own data and not be censored. And so decentralized social media is an interesting thing on the horizon. So I think the use cases are here. It's the only skeptics really that I still run into. It's typically a generational divide, and frankly, just like people over 60, you might find a few skeptics, and people under 60, it's increasingly rare to find.
One of the reasons we're holding the summit is because of what you said to us repeatedly from your meetings with policymakers, which is, in the end of the day, use cases, applications, real world experiences that regular people can have with crypto is ultimately going to be the deciding factor. What do you think the next kind of killer application is of crypto?
Well, I'm really excited about payments. I think that we're having a moment right now. A few things all these pieces took a while to get in place, but they've started to happen. So one is having US dollar-backed tokens like USDC. I think that was a step in the right direction, that you needed like a reliable, compliant piece of infrastructure for that. The second one is layer 2. And so if you're not familiar with what that is, essentially all crypto started on layer 1. It was decentralized and really elegant from a computer science point of view, but it was kind of slow, kind of expensive. So like kind of when the internet first started, you had dial-up modems. And then eventually we got fiber optic cables and broadband internet. And so crypto is now having its kind of broadband internet moment with the advent of layer 2. Costs have come down by an order of magnitude. Confirmation times have come down by an order of magnitude. And so, whereas previously you might only do an occasional transaction with crypto, now it makes sense. It's actually starting to become practical to use for day-to-day purchases and activities. So Coinbase is trying to do our best to help that, with Base as a layer 2 solution that we've put out there, and making kind of layer 2 the default in our products so that people shouldn't even really need to know which layer they're using underneath. Ideally, that is all kind of abstracted away. Like, they just want to pay for something and not have crazy fees or delays. And I think we can help that happen in the payment space.
So when I go to Compass and I want to buy a cup of coffee in the old way, I just use my Apple Pay or whatever, and it all seems instantaneous. Why is crypto an enhancement to that?
Yeah, well, we had the founder of Compass up here earlier. I mean, I was in his shop, and he just laid it out for me. He's like, okay, first we're going to swipe a card. By the way, I think he told me he's paying 3.75% on that. And then the total cost in his business per year is like 600,000, or I think it was something in that range. If you have by the way, people might think, well, why do I care? The merchant's paying that. Well, guess what? You as the consumer are indirectly paying it in the form of higher prices. Like, the cost of goods sold, all the costs that make their business more expensive to run are eventually going to get factored into that price. So I also then paid for a copy with USDC on Base, and it was less than a cent, and it arrived instantly. So that's a game changer, especially for a lot of merchants that have they're relatively low margin businesses. Some merchants, they might only make 5-10% margin. So if you take out 3%, it might actually double their margin, or be really material for them from a business point of view.
Marc, what are you excited about in terms of kind of a big application of crypto technology?
Yeah, so I've been working, I'm actually out here this week because I'm working in DC on really two big policy areas, both of which I kind of bucket under freedom to innovate, and so one is crypto, and then the other is AI. And AI has become a kind of very hot button topic in the very exciting topic in the tech world, but also a hot button political topic. And last fall there was basically I would just characterize as sort of waves of concern or panic that sort of were moving through the political system about all kinds of potential downsides from AI. And this, the system's kind of processing through those. And then, as of today, I think the actual specific concern that a lot of politicians, policymakers have, and also a lot of normal people have about AI is actually very specific and very practical, which is deep fakes. And so the idea that you're going to have a photo of yourself doing something that you didn't do, or a video of yourself saying something that you didn't say, if you're a politician, this is a very obvious thing to be concerned about, because in the run-up to an election, a video that has you saying something horribly offensive that you never actually said, could cost you an election. And so it turns out like this is the thing that they care about the most, very specifically. And it's a real conundrum. And with traditional technology, you have a real problem, because what everybody wants, what everybody thinks they want when they start thinking about this, is they want an AI-generated content detector, and so they want to be able to take a video and detect that it was AI generated. The problem with that is the AI generated systems at generating text and video and photos are really good, and there actually is nothing about the videos or photos or text that sort of indicates that it was made by AI. And so there's people talk about watermark. There's really no way to watermark these things or have there be anything that guarantees that you can detect which ones are AI. And so what I've been telling people, and I've been doing this all week, and the argument goes really well, is actually you have to solve the problem the other way around, which is you have to basically digitally certify the good stuff. And so if you're a politician, you have to basically have your staff take photos, take videos, put out campaign statements, and then digitally sign with your digital ID, digitally sign those in a way that you are authenticating that those are real. And by the way, if your fans or constituents take their own photos or videos, then you can also certify those, and you can say those are also real. And then you need to register those someplace, so that whenever there's dispute over whether some video is real, if somebody's saying something like is it or is it not, and if it's the video that's been registered somewhere, then it's real, and if not, not. And then it's a question like, okay, where do you register the content? And there's basically three choices. One is you give the government, you let the government create a ministry of truth, and let them arbitrate it. And I think, generally speaking, no matter where you sit on the political spectrum, that might be a bad idea. Second is, let a big tech company do it. Let Google do it or something. And again, wherever you sit on the political spectrum, there's not a lot of trust these days about the big tech companies, so maybe that's a bad idea. And then the third would be on a blockchain. And so basically a digital content blockchain-based system for content authentication and certification, provenance. It's just kind of, if you're in the world that we're all in, it's just like it's the obvious way to fix the problem. And I love this. One is this is like the actual real answer, but also this is an example where people are just like, you can see it in their eyes, where they're just like, oh, that makes sense. And so my hope is, it may be that this problem created by AI is the ideal problem that we can solve in this community, and we're going to try to help with that.
There's a lot of policy work around the world, whether it's through litigation or what have you, or through discussion about regulation, about dealing with the fact that a huge percentage of internet traffic flows through just a few of these walled gardens you talked about. Now, you said you have no view on them one way or the other, but a lot of folks a lot of policymakers are thinking regulation or litigation is ultimately the answer to these walled gardens. Your colleague and partner, Chris Dixon, actually wrote an amazing book on this, Read, Write, Own. But do you want to talk about how crypto and decentralized blockchain technology can be a solve to them?
Yeah, so the problem, it's sort of, the logic, and look, a lot of well-meaning people kind of think this way, and the logic kind of goes, okay, we've got a set of companies, we don't like what they're doing, we're worried about it, and so therefore we need to have an answer, and regulation is an answer, and so we're going to regulate them. And so a great example of that was the banks after the global financial crisis, right? So the global financial crisis, 2008, right? The definitive book on the global financial crisis was called Too Big to Fail, right? Because the whole problem is you had these banks that were too big to fail, therefore they had to get bailed out, therefore there were all these, just catastrophic things that happened in the system. And then there was this huge push, okay, we need to regulate the banks even more so that they're no longer too big to fail. And so they passed this big legislative bill, regulation bill called Dodd-Frank. And they said this is going to solve the too big to fail problem. It's going to really cut these banks kind of down to size. You may notice that the too big to fail banks from 2008 are much, much larger today than they were then. They're much, much too bigger to fail. And you might ask yourself, okay, well, how did that happen? And the answer is that Dodd-Frank in practice was what I call the Big Bank Protection Act of 2011. It was this wall of regulation and compliance that JP Morgan Chase and the other big banks had 10,000, 20,000, 50,000 lawyers and compliance people to be able to comply with. And that bill killed the creation of new banks in the US, took it to zero. It's now effectively impossible to start a new bank in the US because you cannot possibly conform to all the laws and regulations. And this is a problem that's very well known in political science and in economics, and it's the problem of regulatory capture, which is when big companies come to DC and they say they want regulation, what they want is regulatory capture. They want a wall that defends and protects them against any kind of new startup activity. And so there's just like an absolute clear and pressing risk. And this is happening with AI right now. The AI companies are out here pushing for basically regulation, which means regulatory protection, which means a cartel. And the same thing is still the banks still push for this all the time. And so it's this thing where it feels, regulation, it feels good, it sounds good, and then it backfires. And our economy is just riddled with monopolies and oligopolies and all these different markets that have, health insurance, all these other markets that have this kind of regulatory protection, regulatory capture with ruinous results. And so I think just practically speaking, that doesn't work. It leads to the outcome that you say you didn't want. And so the other approach is competition, right? The other approach is actually a free market competition in the way that you hold big companies to account is you actually let people compete with them and you let people build systems with new technology and with new models and new kinds of decentralized systems to be able to do that. And that seems to be the obvious way, from everything I've seen in 30 years. That's the obvious way to make these systems work better. It's an indirect argument. You have to kind of, people have to kind of think two steps ahead, and I think they kind of have had to see it go wrong before at one point, before they can wrap their head around it. But I think at this point, it's actually a pretty predictable outcome. And and there are quite a few people, out here who do understand that. So hopefully that mentality will over time win.
I agree. I mean, competition is the ultimate consumer protection, especially if there's low switching costs. And it's arguably competition is the best regulator of how these products and services come to market.
So there's a global context, and we're getting a little bit short on time. But Brian, you travel all around the world. You talk to policymakers and regulators everywhere. Is the rest of the world struggling the way we are in getting clarity regarding crypto rules, or what's your experience? And are we falling behind as a country?
Yeah, so it's kind of a crazy stat. I mean, 83% of the G20 countries either already have crypto legislation on the books or are in process of drafting it. So the US is definitely a little bit behind here. Whether you go to Brazil or Singapore or the European Union kind of passed this comprehensive crypto legislation, MiCA. The US is still stuck in the early stages of this conversation. And that's a shame for America. I mean, America is a financial hub. It's a tech hub. The dollar is the reserve currency. We need a digital dollar. We need a clear rule book to make sure that this technology can be built here in America in a way that embodies American values. And much like the internet, a lot of the internet biggest companies were built here as well. And today that's not happening. A lot of the crypto activity is actually being pushed offshore because we have this environment of regulation by enforcement. There are no clear rule books. We have two federal regulators between the CFTC and the SEC that have unclear jurisdiction, which of these are commodities, which of them are securities. And unfortunately, it's been a little bit politicized where they, Gensler and et cetera, kind of want to attack crypto and without providing any kind of clear rules for the industry to follow. So, we've taken this up as a personal, effort and tried to get clarity from the courts, which I think is a big step. We're also meeting with members of Congress actively, and there are two bills that got bipartisan support in the House committees. There's the Stablecoin Act, and then the one called FIT 21, which addresses this issue of what's a commodity and what's a security. There's also some activity in the Senate currently around this as well, which is promising. So how and when these things actually align, it's difficult to get bills passed right now. Of course, in the US, you have to kind of negotiate, attach it to some must-pass legislation. But this is kind of a no-brainer. Most of the folks in Congress we speak with, they kind of feel like, okay, yeah, it's obvious. I mean, this technology is not going anywhere. There's a lot of innovation potential. We want to make sure consumers don't get harmed. I personally land a little bit more in the Marc Andreessen camp, which is competition would actually just enable a lot of this. But if we're in an environment where the regulators are just kind of, dropping subpoenas and enforcement actions on people randomly without any clear rule book, maybe getting some clear rules would actually help a little bit here. So that's what needs to happen in the US. How and when it will actually happen, I don't know. But until then, we're just going to keep building and keep defending the rights of the 52 million Americans who want to use crypto. And I think it's going to be really politically unpopular to be anti-crypto in November. We can talk about that if you want.
Yeah. Well, I need to make sure I ask Marc about kind of the national security case because you have such a profile on it. So if you could talk about the national security case and then maybe talk about the efforts that both of you have taken on to take the 52 million Americans and give them the tools they need kind of have a voice in the system. But
This is national security case for crypto?
national security case for crypto, and then kind of picking up on Brian's, kind of where Brian went in terms of the political case for getting this message out to policymakers.
Yeah, so this is one of those just completely bizarre things that you just like. I just have this out-of-body experience because I read these descriptions, and I hear this from people who claim to be well-educated, and they have this description of like crypto's this vortex of like anonymous money laundering, untraceable money, and like all this stuff. And I just keep thinking like blockchain. Like I read the Bitcoin white paper. Like it's all recorded in the blockchain. Like that doesn't match. And the whole thing is just kind of strange. And then I had this conversation actually early on after we invested in Coinbase with a former, I won't out the person, but a former very senior national security official, very highly respected person. And this person, this person basically said like, what's going on? This was early, so he said, what's going on with Bitcoin? And I kind of explained the whole thing. And then he said, well, if everything's on the Bitcoin ledger, like, isn't that actually really, really good? And I said, what do you mean? And he said, well, like for example, for like a lot of terror financing. The way a lot of terror financing, so for example, just as an example, a lot of sort of Middle Eastern, kind of centric terror, the way that it gets financed, the money gets transferred around is through a system called the Hawala system, which is a peer-to-peer banking system that basically works through family members. And so if you want to funnel money to a terrorist regime, from the US, you give the money to somebody who's like a member of an extended family. And by the way, the money may never actually transfer, they just put it in their account. But they tell a cousin in another country, this amount of money has been deposited over here, and then it maybe goes through 3-4 hops, and then it ends up, funding a terrorist attack. And and different kinds of criminal organizations, terror organizations around the world have variations of this. And basically what this person said is like the system is completely untraceable, uncrackable. Like it's not, the money doesn't even move because you just settle across all the accounts over time because it's family members or members of a clan or something. And then it's like totally dark, right? It's like there's no record, there's no ledger, there's nothing online, there's nothing to track, there's nothing to trace, and so the money's untraceable. And so this person said basically, wow, I hope all the terrorists start using Bitcoin, and because then in that case we can basically analyze the data and we can and we can track it. And I followed up with this person later, and this person said that he had talked to other national security officials, and they had a project to do this, and they codenamed it. They called Bitcoin prosecution futures. They're like, wow, this is tremendous. How can we get all the bad guys to use this? And so it's just this like completely bizarre fake claim that it's this like somehow this vortex of criminal or terrorist activity. The good news is I think the pros, when I do a fair amount of work out here in the national security realm, and I think that the pros that I talk to, I think they all at this point understand this. I think the prosecutors understand this. I think the intelligence officials understand this. I think they get it. But it's still this like weird talking head thing where people either cannot bring themselves to try to understand it or are deliberately misstating what's happening. So that's another thing where I think we as an industry have to just keep pounding away and help explain to people that this is not what they think it is.
Yeah, I think the best data I've seen from independent third parties is that about 0.5% of activity in crypto is for illicit purposes, which would include all fraud and everything. I think by comparison, PricewaterhouseCoopers estimates the US dollar cash is about 4% illicit activity. So there's really no evidence to this claim that crypto is uniquely crime-ridden or something like that. It's actually better than the US dollar cash. And to Marc's point, with blockchain analytics, a lot of this it's traceable on these ledgers. It's really a bad idea for anybody to try to use crypto for crime. You're putting yourself at risk in a way that you wouldn't be with the US dollar. So anyway, I think that's an important message that is being willfully misconstrued by people who just don't think crypto should exist for whatever political reasons that they think about.
So we have a couple of minutes left, but just like a minute each. Both of you invested heavily in giving the community a voice in the policy process. I remember, Brian, when you and I had our very first conversation, you said, there are tens of millions of users. We need to activate them, get them to have a voice because they're being kind of run roughshod over by demagogues, frankly. And here we are with StandWithCrypto.org, independent organization that you've helped launch, has about 400,000 people who put their hands up and said, we want to be active. But I guess you're not surprised by that because you kind of saw it 3 years ago.
Yeah, I mean, this has been really exciting to see. So look, there's a lot that we can do in this upcoming election in November. We've donated to certain organizations and super PACs that can help do it in that part. But I think this grassroots aspect of it is really important. We've got 52 million Americans who've used crypto. I think we can get at least 1 million of them to raise their hand and say, you know what, I really want to elect pro-crypto candidates, standwithcrypto.org is a really great organization. They've got scorecards for every candidate with all the public statements they've made about crypto. It's got kind of like a live feed of calls and going out to representatives and donations and people registering to vote. There's a bunch of rallies that are happening now around the country as that number grows, and I think there's even a reception after this today for the standwithcrypto.org. So if any of you have not signed up on standwithcrypto.org, please go do so and help share it on social. I think if we get that number to be 1 million or more, it's going to send such a powerful signal in November that we're going to elect pro-crypto, pro-innovation candidates in the United States that recognize the potential of this technology. Okay, yes, let's make sure we protect consumers if that needs to come from competition or sensible regulation that is not, regulatory capture. These are all reasonable things reasonable politicians can discuss. But if you're going to bury your head in the sand and be anti-crypto, I think we need to send a strong signal that that's not representing our values in the United States.
Marc, can I give you the last word?
There we go.
You want to add a last word to that?
I can't possibly add to that. I just say, yeah, it's just great to see everybody here today, and this community has been just incredibly vibrant and incredibly exciting through very dramatic ups and downs, and we're very excited for the next several years.
Great, thank you both. Thanks, everyone.
Good. Thanks, everybody.